And I've always been perplexed where there's so much sunlight in India, but there's not enough energy, and we are importing energy and crude oil.
It's all about cost. If it makes sense for the user, there's a cost benefit for him, then he's going to adopt it. All the love for climate tech, it comes on the later stage, the add-on things, the icing on the whole. People have become more conscious in their choices to a sustainable product.
The fact that recently, specifically from my observations in Mumbai, I think I've seen increasing number of electric Swiggy rides and Zomato rides, right? How are these placed? Are these on rental models, or are they outright bought by Zomato, Swiggy, or their drivers? How are these working? Hello and welcome to a brand new episode of FinTech Ki Baat Dil Se. In today's episode, we bring you a brand new format called Jab De Met. Jab De Met is going to be a series of panel discussions and fireside chats with industry experts exploring various new topics and dissecting a single topic from multiple perspectives. Taking that flavor into continuation, in today's episode, we have with us Aditya Damani, founder of Credit Fair, a digital lending NBFC, and Mr. Varun Goenka, founder of Chargeup, an e-mobility platform. Hi, Mr. Varun. Hi, Aditya. Thank you so much for joining us.
Hi, Shreyas.
Hi, Shreyas. Thanks for having us.
It's a pleasure having you, and thank you so much for your time. Having said that, let's directly get on to the topic of today, which is how will FinTech revolutionize the clean tech industry? Just to deep dive a bit more into the topic and to the background context, essentially clean tech refers to, in this conversation, specifically e-mobility and rooftop solar and power solutions as such. And one of the problem statements that I think I've identified that kind of plagues this industries is essentially the initial high cost of investment when getting into this specific technologies, or when adopting these technologies specifically for retail consumers. And the idea is to understand how Credit Fair and Chargeup are kind of working together to solve for those kind of problem statements. So let's dive deep right into it. Over to Mr. Varun, would want to hear a bit about you as well as what Chargeup does.
Okay, thanks, Shreyas. Chargeup, we are a EV platform where we are building a driver-first ecosystem. Call ourselves as a FinTech company where we, provide finance, network, and tech for the last mile mobility drivers.
All right, so finance, network, and tech. So FinTech. Okay.
So, if you see EV industry, firstly, is there anyone, you or me, buying an EV? The first question is about the capital expenditure, and second is on the range anxiety.
Mm-hmm.
But as you move ahead on the larger side of the industry, there's an issue of it's a subsidy-driven market.
True.
It's a lack of underwriting. There is no buyback arrangements, high financing cost. So together, there's a large problem for the industry to grow.
Right.
Chargeup, what we provide solution. We start with network, energy as a service, swapping, charging, so that first level the driver gets ease that there is no lack of infra while he's using an EV. And second, then we provide him the financial services in terms of buying from EV adoption to management, asset management complete at Chargeup. So that's about us. You said rightly, yes, in this clean tech space, be it mobility or rooftop solar, your initial capex is high because, of course, firstly, there hasn't been a mass adoption.
Right.
Secondly, typically we don't look at a life cycle cost. We look at the initial cost of adoption.
Mm-hmm.
That's where finance play the major role. You see, any industry, finance is like the inflection point where that industry grows, changes the orbit altogether. So, I think, and especially new-age FinTech companies, what at Credit Fair they are doing is definitely not a traditional banking, will be able to do. Especially even after I've seen in rooftop solar, government has, included that into priority sector lending, still you see adoption is less and the financing is still not easy for a common man.
And given with that, I think also the plethora of options and what kind of a system to choose and what kind of the right kind of installation service is also pretty important when it comes to it. Yes, I think I completely understand. Completely understand and agree with the problems that you have mentioned, and I'm glad that there are people like you out there who are actually trying to solve for the common man over here, basically streamlining the adoption. Thank you so much for that overview. Over to you, Aditya. I think you are coming on the podcast for the second time, and I think your previous episode also, was one of the audience's favorite. So many of our existing audience already kind of know you pretty well. But just for people who have joined us recently and might have missed your episode, a quick overview of you and what CreditFair does.
Yeah, thanks so much, Shreyas. Really happy to be back and glad if the audience has appreciated it. But I'll refresh, for everyone's knowledge. So CreditFair is an impact-focused fintech lending startup and a platform. So we have a B2B2C origination model for helping a merchant to enable point-of-sale based lending. Yeah. So within impact categories, green energy or climate tech, as you called it, there is education, there is healthcare. So these are a few use cases which we are financing. We deeply engage in the ecosystem and ensure that the awareness as well as accessibility, the cost of ownership can be affordable for the common man by either providing no-cost EMI or easy EMIs. And as a platform, we also connect the lending ecosystem, or we call it low cost of capital, to these borrowers. So the low cost of capital comes from banks, impact funds, NBFCs, or even the retail investors.
Got it. Perfect. Thank you so much for the quick refresher, Aditya. Moving on to the next part of the conversation, I would want to pose this question to both of you, and let's start with you, Aditya, on this. So while you are an impact-focused credit platform, right? What essentially kind of pushed or inspired you to basically, create an impact on the clean tech space as such, and why essentially do you think this was the right time to get into that?
Right. Frankly, I think this is something that's been there with me since childhood. My family comes from Rajasthan originally, my grandfather. I've always been perplexed where there's so much sunlight in India, but there's not enough energy, and we are importing energy and crude oil, right? I think it's a problem that I've always wondered about, but I felt now was the right time because the technology has become much more commoditized. The number of players has really expanded, and the affordability has kicked in. The government is very cognizant and targeting net zero emissions by 2070. Right. There's a global movement towards making sure that we are as a generation, we are giving back to the environment and not just taking things. So overall, I would say the macro tailwinds were there, but not just the macro tailwinds. The micro industry is also really grown. With people like Varun, the number of EV manufacturers that have come up, the whole solar installations has already been in gigawatts in India at a utility scale level. But now is the right time where that same expertise can be applied even at a household level. And that's where felt it was the right time to focus on this. We had already worked with for example, a player called Urjan Cleantech since 2019. We saw and understood the challenges both from a asset as well as a finance perspective. But the number of players like Urjan has really increased in the last 1 year, and which is where again we are probably from the last time I was there on this podcast till now, things have really grown a lot for us.
Definitely. I'm glad to hear that, and I think that really makes sense. Personally, also, even though I've not been that entrenched into the clean tech space as such, but I've seen being in the startup ecosystem actively, I think I've seen a lot of clean tech companies coming up, whether be it on pure, micro mobility side or manufacturing side, or as well as, from the rooftop solar and other, battery tech side as well. Although I don't, if I try to kind of deep dive into that, I wouldn't be able to understand about it much as of now. I think Mr. Varun would be really, helpful and throwing light on that stuff. But yeah, I think I've seen the trend generally going upwards, as you rightly said. Moving on to you, Mr. Varun, I also have a special ask from you, although while the same question is also posed for you, as in why this space, what inspired you to get into the clean tech space? And if I'm not wrong, before this, you were also with an organization called Ampere, if I'm not right?
Atlanta Energy.
Atlanta Energy, all right. Okay. So yeah, I mean, you have been in this space for quite some time, almost more than half a decade, if I'm not wrong. So
Not a decade now.
Almost a decade now. Okay, awesome. So yeah, that probably is almost right from the start when the kind of clean tech revolution began and consciousness came in about how we are ruining the climate, and people actually started, trying to change things. So yeah, would want to hear a bit more about why did you get into this space, as well as what interesting, I would say, developments have you seen? Like, for example, in FinTech, we have seen few changes from right back when it started in 2012, when you've seen likes of a few companies coming in without actually naming any, but I'm pretty sure demonetization actually gave rise to a few companies and they kind of fizzled out. A couple of competitors came up. So if you have seen any those kind of industry drama as such, would also want to kind of get some info on that. So over to you.
So Shreyas, frankly, I come from we are Marwari Baniya businessman. So primarily it was not driven by the love for clean tech or climate tech. And 2010-11, frankly, these terms didn't even exist.
True.
When I started. It was more like an opportunity, what we saw that point of time, that okay, this is a good opportunity. It made sense because the prices were corrected for, as it was the benchmarking was right for the industry to adopt solar at that point of time. And now EV, say, I've seen over years, it's all about the adoption of any such clean tech, be it a rooftop solar or EV, is all about cost. If it makes sense for the user, there's a cost benefit for him, then he's going to adopt it. All the love for climate tech, it comes on the later stage, the add-on things, the icing on the whole cake. But yeah,
right.
The main thing of the cost. So interestingly, when solar also we started, that time, the cost per unit cost of solar was almost 2.5 times of the, conventional power. Today it's at a parity, we are there.
Right.
So major adoption happened in commercial sector when solar started, especially industries. Same thing, same trend if you see in electric vehicles. The first adoption started into last mile mobility, the commercial vehicles, the 3-wheelers and 2-wheelers.
Right.
So it's a clear indication that it has to make commercial sense, and people who are generating revenue from these assets, they are the first one to adopt it. Okay.
True.
Going ahead, yes, if I look at now after post-COVID, especially, and especially people who are living in Delhi, where we are used to of the polluting environment, the PM 2.5 levels. People have become more conscious in their choices towards sustainable products. And I'm going beyond solar or EV. I'm talking about any consumer product or you use. If you see the next generation, and they actually look for products which are sustainable. So there is an inclination. And I've realized this more when my 8-year-old son in his school, they have been taught a lot about this on the conservation of water, sustainability, that is the core subject around it. So going future, I think that's the, and even if you look at the large corporations, today ESG has become the core value around which they build up. Vedanta announced that they'll be subsidizing all the electric vehicles their employees buy, be a 4-wheeler or 2-wheeler.
Oh, wow.
So I think globally now, it has become a cool thing. People have that focus around it. And the next generation is making their choices towards sustainable products for sure.
Understood. No, I think that is good to know, right? I mean, basically, these kind of paradigm shifts in consumer behavior will have to be inculcated from the next in the next generation, right from the childhood. And I think if you're saying that even kids in the school, even in second and third grades, are being ingrained with these kind of values and specific consciousness, climate consciousness, and I think that is a great place to begin with, right? Because that will make sure that we don't they don't create one more input leg into the ongoing feedback loop, and it sometimes ceases to exist as such. No, great. I think that is really insightful. Moving to the next piece, I would want to understand from you, Mr. Varun, on how do you, what kind of challenges do you see specifically when it comes to affordability and penetration of these clean technologies, right? So, what are the major challenges? I think, as you mentioned in your earlier dialogue, that affordability is probably, and the priciness was earlier one of the problems because of which commercial adoption came first, and retail is now creeping in. So how is the current industry landscape poised?
So Shaz, any new thing to have reach to a mass adoption scale, stage. Stitching all the pieces together is a challenge. How do you need to reach out to your audience? How do you need to put up the financial modeling? How you have to get the whole ecosystem together for this.
Right.
Even when solar started, it was the supply chain problems because all the panels were imported from China to, the level of understanding about the technology, how will it perform, the trust on that. And all these are stitched by a lot of government regulations around it. So all these things coming together is something you have to wait. You need to have a lot of patience. You have to have a lot of persistence for this. And Aditya will agree on this because be it solar or EV and FinTech, we have seen this. And yes, but one major role which is played as a catalyst here is definitely finance. If you look at automobile industry, that 96, 97, when that was under PSL and it started financing, suddenly there was a sudden shift in that. You see consumer goods and mobile phones. So same thing we see, it will be coming into EV as well. Just like a mobile phone, you pay 5,000 rupees down payment and you just take a two-wheeler home and pay energy as you use. So finance will definitely be the major inflection point in all this, and that's the challenge actually. What challenge we used to face 5 years back, because that time the startup ecosystem was not that evolved. Today, if I look for any financing solution, as Aditya has taken a step towards, doing a new way of underwriting these products, these consumers. So that's something, as the startup ecosystem is evolving, it's becoming easier to, penetrate any such technology or product among the masses.
Got it. No, I think I completely agree with you. Aditya, from your perspective, when you're looking at this clean tech industry, right? From a financing perspective, how do you see the current landscape? Let's say traditional vis-a-vis the new lenders or the modern lenders, right?
Right. I would say maybe first I could talk about like some of the lens in which traditional lenders view this space, right?
Sure.
It's a whole new asset or a whole new industry that has sprung up, which there is not enough of a history for them to bank on. So what I mean by that is, if it's a Maruti car, if we compare it to like an EV, they are very familiar that Maruti cars' life is going to be so much, the resale value is going to be so much, the chances of any defects or fires or anything like that is very low. Right. There is a big service network. Kahin pe bhi aap jao, Leh Ladakh, maybe you can fix your car, right?
True.
So I think it's a bit of a chicken and egg thing, but because these startups are primarily the manufacturers, Bajaj and TVS, etc. Everyone is getting into EV, but they are actually still a bit slower to produce these type of vehicles. So I think that standardization of quality and the trust in the manufacturer and the product, I think that has taken a bit of time. So I would say that is one issue from a financier's perspective. And secondly, if I look at it from the customer's perspective or from the manufacturer, like the tenure of the loans or the interest rate or kind of the AMC or the warranty that would be eligible, right? So all those practical aspects in terms of ownership and maintenance, I think getting a good understanding of that has not been easy, and that's where probably like a new age lender or a fintech has been able to understand these things a lot better, a lot faster. Especially in, let's say, in the commercial applications, as Varun mentioned. So, like a e-rickshaw driver or a Swiggy driver, that's a very different type of profile of borrower, which is again not usually served by a bank. A bank will look for someone salaried or with a stable income, ITR, time statement, all these factors, right? So looking at the trajectory and the future income of an individual is not something a traditional lender is very comfortable with or their models are attuned to. So I would say coming to both those things, like the quality of the product and the underlying economics and underlying income stability, income potential rather, I should say, of the underlying borrower. Those are things which a fintech has been able to understand, and that's where I would say still a lot of this is driven by fintech. There could be like an Ether or some of these top manufacturers who are going a bit more after a cream crowd of prime borrowers who they are catering to. So there you will see probably like an IDFC First or a bunch of banks being present. I would still say in like a traditional dealership-driven two-wheeler financing, still there is a decent penetration of banks or large NBFCs. But that's still a smaller part of the market. So they are still not addressing the majority of the market, which is there, whether in EV or in rooftops.
Understood. No, I think makes sense. And when we are looking at this segment, let's say, when do you see an inflection point coming in wherein traditional financiers will be completely ready to get into the EV segment with, let's say, as much agility or as much readiness as the modern lenders?
So I think like again for a individual consumer, probably they are already there and they might go faster. On the commercial side, I still feel it's going to take time, because even if they trust the product, like underwriting that type of borrower segment, I don't know if they're interested in, or if they will adapt fast enough to take on that risk. So I think that will take time. In residential solar, I feel there is an intention, but again, typically what we've seen, it's a thing across fintech, and that is an opportunity for players like us. Once you go below a 50 lakh or a 20 lakh rupee ticket size, banks are just not that attuned, or they're not that interested. They eventually have such a large balance sheet that none of this really moves the needle. They probably would want to partner with a fintech as compared to do all these things themselves.
Being the wholesaler and fintechs being the retailer.
Yeah.
Yeah. That's the standard model that they prefer to when they want to do a dipstick of the industry. But having said that, right, let's keep the mobility piece at side as of now and looking purely at rooftop solar. Do you see a point wherein, let's say a couple of years down the line, wherein the demand for that surges, maybe because either the penetration increases or the price parity is reached, wherein the initial capex is not that high enough that a normal middle class person can actually think about doing that? Do you see a point coming in wherein lenders might actually be traditional lenders might actually might swarm the industry, getting into opening up new segments to just specifically address this, or maybe altering the policies specifically to kind of tap into this segment?
So traditional lenders have started looking at the segment. There is actually a lot of development funds which want to support the growth of the segment. So, for example, like a Bank of Baroda or SBI have actually already tied up with some development funds who are giving credit lines which are supposed to be deployed by the bank for green energy and specifically rooftop solar actually. Similarly, SEDBI is also trying to support the sector and support SMEs in adoption of rooftop solar. So I think there is already the fuel or the capital is available, but the gap is in the underwriting, the customer experience, and just the overall turnaround time, which I frankly have no idea when those things will get bridged, or that requires the entire internal rewiring of the entire machinery. So that's where we're at.
No, that makes sense. I think that makes complete sense. Having said that, right, coming back to specifically what you mentioned earlier, right, commercial segment has not yet seen that much interest from traditional lenders, and I find that really ironic given the fact that commercial side is normally the first ones to adopt the newer technologies and adopt it more open-mindedly because they see the long-term ROIs that they can probably get from these technologies, right? So why do you think that is essentially the scenario, given the fact that these people, the commercial industries, are essentially the first ones to adopt these newer technologies?
Yeah, I think Varun would be in the right position to answer that. I'm happy to add.
No, Shreyas, I didn't got a very clear. Your question is why the traditional lenders are not comfortable with the commercial, the industries adopters. Is that the question?
Yeah, and given the fact that they are normally the first ones to adopt these technologies, right?
I don't think so. That's the case. If I talk about at least in solar, initial days, what we have seen is the traditional lenders were more comfortable with the industries and the using for commercial purpose. Yes, when you talk about the mobility space, it's the other way around here, because here they are not. Again, in solar it's a static thing.
Right.
You can take it back, but again, there's no buyback. In mobility, there's always a risk. It's true, and with all these news around fire catching up in the two-wheeler space and all, so they have become more apprehensive on that. So they look at more personal mobility as a more comfort level, where they look at it more like a personal loan, not an asset-backed loan. That is what my understanding for these two sectors are. I think Aditya will be able to give more clarity.
Yeah, I meant actually again for the EV segment, not as much for solar. I think it's like what I said earlier about the underlying, more blue collar profile of borrowers is basically, I think, the concern. In the case of rooftop, I mean, not even rooftop, I would say more like utility scale solar. These are large companies, let's say like Reliance or whatever, like large corporates who were backing these projects. So, underwriting that was very easy. But it's quite difficult to underwrite for these other sectors.
Yeah, even I see underwriting, they're not actually underwriting the project or the product. It's more they look at the individual balance sheet or their own credibility. So that underwriting is not in place.
Yeah, that's what I meant exactly. And the early adopters are, let's say, a Swiggy driver or a Ola driver, Uber driver. So I think, for example, now Uber itself is looking to do partnerships and encourage fleets so that there can be more Uber electric cars in India.
Right. So even given the fact that recently, specifically from my observations in Mumbai, I think I have seen increasing number of electric Swiggy rides and Zomato rides, right? How are these placed? Are these on rental models or are they outright bought by Zomato, Swiggy or their drivers? How are these working?
So, it's a mix of both. They have drivers who own the vehicles and they subscribe to their platform, the Zomatos and Swiggies of the world. And then there are also drivers who work through a fleet operators with Zomato, Swiggy, where they are on the rental. They use these, like the Ulus of the world, where they use these two-wheelers as on rent. So both the segment, driver come ownership model, and then there's a rental model.
Got it. No, that makes sense. All right. Moving on to Aditya, you one final question from credit fair's perspective, right? So you have been dabbling into the clean tech industry for quite some time, and you might have seen a couple of life cycles as well. So how has that experience been in for you essentially as a lender? What if any, what anomalies or what any industry specific behavior or insights you have?
Okay, so I would say that for us as a fintech, it's not just purely about the lender, but we need to make sure the manufacturer, our sources of capital, which are different types of lenders, as well as the end customer, are all aligned, and everyone's problems are being solved, so to speak, because of the value we bring to the table. So, from the lender's perspective, I already mentioned, underwriting the asset or underwriting the borrower in a better way. That's where we have already been adding a lot of value, and then accordingly, we have got, let's say, a Ugro Capital has come on board as a lending partner, or we have SBI and other type of large lenders who are already working with on our balance sheet or off our balance sheet. From the manufacturer's perspective, what we see is that some of these manufacturers, like let's say a Tata Power Solar, or even such a large brand and a trusted brand, has already been working with the SBI, but then they are only able to get a good amount of approvals for a very seasoned SME. But as soon as you come to more of a MSME, or you come to residential, there's a huge gap, and there's not actually enough accessibility or availability of a financier. So there, we've seen that we've been able to add a lot of value with a customer-centric approach, same-day disbursement or same-day approval as required. We have been able to also secure the asset in such a way that we are making sure that the product or service is aligned with the customer's payments. So let's say if you were paying in cash, you might pay like 20% and 60%, and then again 20%, in milestones. Actually, even something like that, most lenders are not handling. Their systems don't handle such things. So we've been able to align such things from a practical perspective also, so that the interests of the lender and the manufacturer and the end customer is all completely aligned and protected. So yeah, I think what we see is that as long as the cost of ownership, like Varun mentioned, you just put in a some down payment to show your skin in the game, and rest is financed, is available. The customers are very happy to adopt this. They just have to make sure that the product or service that was promised is actually received by them. So let's say in rooftop solar, someone said that आपका electricity bill भूल जाओ, पूरा आपको solar से आ जाएगा. So if such things are being promised, we as a lender have to make sure that actually they are being delivered. Otherwise, it could hurt the interests of the consumer and our interest as a lender.
True.
So, but we've seen actually, like on average, at least 75% of the electricity bill of a customer comes down, which is, a substantial saving, and basically the asset is paying for itself. So, and when that happens, as a lender, you're quite secure. So yeah, these are the sort of nuances maybe, or I'm not sure if I completely answered your question. Please add anything that you'd like to know more. But yeah, just aligning all the players together, and that's something we really focus on.
Got it. Anything specific from a lender's lens that you see that is that is unique to this specific industry, let's say from an underwriting perspective or from a credit behavior perspective of the consumer?
Yeah, I think the focus has to be a lot on the early warning signals, if I talk from a lender's perspective. So, the early warning signal would be, let's say in the case of a rooftop solar, was the panel installed in a certain amount of time? Or the great thing about this segment is also that the central government is giving subsidies, at least at a residential level. So, is all the paperwork, or is all the things that are required to avail that subsidy happening in time or not? So those are a couple of things. So if a certain installer is not supporting the customer enough, then we need to get that early warning signal and probably not work with that installer and work with some other installer of a rooftop solar. And then beyond that, let's say they even installed it, but then is every month the generation actually happening? Is the saving actually coming through? So tracking that as well through a data-driven methodology. So that's another aspect we focus on. And I would say there are probably similar parallels in the case of EV as well. So, is the rider actually using that battery in a very aggressive way, or are they actually, getting enough value out of it?
Right.
Is the value of the battery really degrading very quickly, or is it degrading progressively over time? Those are certain things that I pick up. But I think just early warning signals to monitor the health of the asset is something which is more critical here than probably a personal loan.
Got it. No, I think that's really insightful, and given the nuances that you spoke about, I think it is still quite some time before, and this is purely my speculation, that traditional lenders will catch up to these kind of parameters that they have to monitor and probably get those systems in place or get those tabs in place that will help them monitor this at an individual consumer level. This is what my speculation is. I mean, do correct me if you feel that I'm probably going a bit off.
No, not at all. That's exactly what we feel, that the value we can bring on board as a fintech. Completely agree with you.
Perfect. No, I think this kind of nuanced what is the monitoring as well as underwriting mechanism is kind of what is giving fintechs like Creditfair a bit more edge in this space as of now. Fair. I think that makes sense. Mr. Varun, one final question for you, and then over to Aditya again for the same. What essentially is exciting you in this space, specifically clean tech, let's say in the upcoming decade? What are you looking forward to the most?
Interesting. Very rarely you get an opportunity where there is a large business opportunity in the market, and it's impactful. When I say impactful, my impact, it starts first with the driver, then to the climate. So that's something is most exciting for us. As Chargeup, what we are building here is for the future, and what we are really excited as a team is, how we build an ecosystem where we don't earn from the drivers, we earn through the drivers. We make the whole data optimized services, be it insurance, be it finance, be it various other services to make their lives better. And I think that itself will help a faster adoption of EVs, which will have its the impact on the climate. But yeah, that's the most exciting thing for us, what keeps us charged up to take this mission ahead.
Perfect. And Aditya, same question to you. In the upcoming decade, what excites you most in this beautiful scenario that's coming up between fintechs and clean tech?
Right. So when we started up Creditfair, the motivation was how to help at least 1 million Indians, move up the credit ladder. But over the last 5 years, I actually see a lot more opportunity on how we can help the average Indian. So whether it's improving their credit score, whether it's helping them save money, through, let's say, electricity savings or reduce fuel bills. So actually, day-to-day saving of is a big motivator now, which we can see upfront. And thirdly is the wealth ladder, where we help retail investors make more money than a FD, with hopefully not with very little incremental risk. So those are the three impacts which we are motivated from a customer perspective, and as as a byproduct, we are actually also helping the environment, which then hopefully my boys or like Varun's boys will also probably appreciate in the future. So I think that's what keeps us excited. I think that the government has set a target of say 10 gigawatts just in residential rooftop solar. And that is not even over 10 years. I think that's within the next 8 to 5 years that they want to facilitate. So we are looking to play our part in enabling that. And even if we can enable 10% or 20% of that, I think will be amazing. And that's what keeps us going.
Definitely. Superb. I think this has been a really insightful panel, you guys. Thank you so much. I think this is our time. And I think we have pretty much covered everything that we set out to. So thank you once again for being so cooperative and for your time. Thank you.
Thanks.
Thank you.